Hey traders, John Howell here. In this video, I'm going to teach you one simple tool that you can use when trading the markets to make sure that you are trading with momentum and with the trend. So let's actually get straight into it. Guys, do not place trade based on what you see in this video. Trading is risky and it can cause substantial financial loss. There's so many areas you need to know to become a really, really good trader. So be smart about the way that you're trading, okay? Now, one of the things when we're looking at trading, right? Trading is all about probability, isn't it? There's no certainty in the markets. And if you ever think you definitely know what's going to happen, like people say, Bitcoin's not going to go to $1,000, you don't know that, right? So stop thinking you know what's going to happen. People at $20,000 didn't say it was never going to go to 6. Like, no way it's going to go to 6,000. So be smart about the way you do it. But remember, trading is about probability. Probability simply means there's a random outcome on any single given one trade, but there's a probability on a collective of trades. So any single trade you take, right, has a random outcome. But if you take 20 of the exact same trade, now you got the probability and you can see how the win-loss ratio and all that sort of stuff. Makes sense? So when looking at that, and when looking at the markets, one of the best things you can do, right, is trade with the trend and also trade with momentum, right? Because you know yourself, if you're trading with the trend and you're also trading with momentum where you got a lot of momentum behind you, your probability is now far greater than not. So what I like to do is I like to put a 52 moving average on my chart. To me, it doesn't really matter what chart it is. And then I like to see the angle of the moving average to see what's actually going on. So for example, if I'm using let me bring up this chart through here, all right? So for example, if I look at this, let's actually just go back here for a minute. Let me go back to here. All right, so let's use this as an example, right? So we're looking at the DIA, which is the Dow Jones. Doesn't matter what market it is, but as you can see, remember it's all about probability. So if we can see how the moving average is nicely, it's smooth and it's strong, and then you obviously then you have this move up. So as you can see, right, through this entire time, it's smooth and it's strong and pointing up. What does that mean? It means that because it's a 52 moving average on my daily chart, means the last couple of months is up, and also tells you that the momentum is up as well too. So as you can see, right, the most highest probability trades are when the market, when the moving average is pointing your direction. And then guess what happened? The market went sideways, went down a little bit, and then sideways pretty much. So throughout this entire time, really, where's the moving average been? Pretty much down, pretty much sideways, right? There really hasn't been any trend or any momentum. Makes sense? Now you plug this to any market or any stock out there, but you start to see, where is my moving average pointing? Oh, it's pointing in that direction. That tells me that the trend is in that direction, and momentum is in that direction as well too. And now, but also, what does the moving average measure? The moving average measures whether the market's getting too extended. So if you go back and look at your stocks, if the market gets too far away, like it did here on the Dow Jones, too far away from the moving average, then we're likely to come back to it. Makes sense? So this is one simple tool you can use on your charts. Not all these other crap indicators, just one simple moving average. Look at the trend. So I like to use a long-term moving average. You know, so a longer term, 52 I use, it doesn't matter. It could be a 60, it could be 72, doesn't matter. You just use the number, and it's not really about the number, it's about what the moving average represents. Trend, momentum, and then are we overextended or not? So I hope this helps you out, guys. This is one simple but powerful trading tool that I use, powerful trading technique that I use within my trading plan, amongst the other things. I look for my trading setup on the chart pattern, and then I use things like this and volume, plus also the high time frame to confirm a real high probability trading setup. Before you go, make sure you grab the free Grab the Markets by the Balls training course. In this training course, you're going to learn the top 13 deadly mistakes, the success formula, charting boundaries, the PT method, the ultimate trading system, the blast off trading system, #1 in trading indicator, the $1 million trade and money management, how successful traders approach the market, and so much more. Get this training course for free right now. Click on the very first link in the description to get this whole complete trading course to give you the edge on your side of trading this market. Do that right now, and I'll see you on the other side.